And so now we get ready for our final plenary session, and I do want to thank you so very much. I crave your indulgence. This is the last session of the day, which promises to be equally engaging. Join us as we delve into the world of fintech and explore how innovative business lines and strategic enterprise partnerships are reshaping the financial landscape. The panel, titled Fintech Resurgence, Transforming the Landscape with Innovative Business Lines and Strategic Enterprise Partnerships. Before we jump into it, let us have a look at this video.
Fintech Thrive, short-lived trend or enduring force. In Latin America and the Caribbean, the fintech industry has grown significantly, boosting venture capital. Many of the region's unicorns belong to the fintech sector. However, the industry is still highly concentrated in a handful of countries and will soon face competition from companies in Southeast Asia, Africa, and the Middle East. To unlock its full potential, fintech companies must keep up with the innovations in artificial intelligence, blockchain, and the Internet of Things. They can also benefit from investor interest in decarbonization and the circular economy. Let's take advantage of digital opportunities to expand globally.
Look around and see if you have lost your case. If you've lost your case, kindly come to the side and I will actually hand it over to you. So we invite Gonzalo Aruiz, Investment Manager, Lead Officer of IDB Invest, to be our moderator. Please welcome Gonzalo. I'm just looking for my moderator. Thank you so very much. Welcome, welcome to the stage. And he is accompanied by Leandro Elduayen, CEO, Coy Banks, Argentina, Daniel Martinez, Director of External Affairs, CLIP, Mexico, Mariam McIntosh Robinson, Managing Director, Kenta, Jamaica, and the United States of America, Sebastian Pertinet, Commercial Director, LATAM, Bankingly, Uruguay. Gonzalo, over to you.
Thank you very much. Thank you. Basically because of all the good things that fintech brings to development. And over the last 10 years, fintech has been the driving force in the transformation of the financial sector, attracting more than 40% of all the venture capital investment into the region, and accounting for, according to the latest data from our periodic research on the sector, more than 2,500 fintech companies in Latin America and the Caribbean. Also, the pandemic showed us how important all the innovations brought by fintech have contributed to resisting the isolation and increasing electronic payments, branchless banking, and so on. By today, most of the financial sector players recognize the importance of fintech and technological solutions in the business. However, also this comes at a time when the venture capital funding has dried up a little bit. So it's also a change in paradigm and a call for greater efficiency in going forward in the sector. So I have a great panel here today, and I wanted to tap on the experiences of each of you in different markets and different activities within the sector. And starting with you, Daniel, you work at CLIP. CLIP is one of the leading forces in payments in Mexico, and wanted to hear from you, in your experience, what have been the driving forces for LATAM's leap forward in fintech, and how do you think we should keep with the momentum of the industry?
Thank you, Gonzalo, and thank you for the question. I want to also thank the organizers for the invitation. I feel very privileged to be here in this very talented panel. The driving forces behind fintech had been several. At the beginning of the previous decade, 2012, 2010, first off with the development or the availability of a huge technological shift with the availability of broadband and smartphone penetration. Without those advancements in technology, most of the shift in fintech would have been impossible. There were efforts previously to try to bridge the gaps in financial inclusion, in digital payments deep, that were previously unsuccessful. And with this technological shift, many business models proved to be efficient, proved to come to fruition. In the case of Mexico specifically, Clip is the leading payment and commerce platform for small businesses. We facilitate payments for all types of merchants, and we enable them to accept all types of payments. And this was possible because of this technological shift. And after that shift, of course, came a realization, a political drive, a recognition that these new technologies, that fintechs were a force of good, and that there should be public policies driven towards the diversification, the implementation of these new technologies. So back in 2014, in the case of Mexico, came a very robust financial reform that allowed the business model that payment aggregators such as Clip carried out later, allowing us to onboard merchants to the digital payments network in a more streamlined, in a more simple fashion. And that proved very successful. There was some sustained growth. There was a flourishing payments ecosystem in Mexico and throughout the region. And eventually in 2018 came another push to provide more certainty for these business models. In the case of Mexico, this came in the way of a fintech law that was enacted in 2018. Soon thereafter, several countries in Latin America began issuing their own fintech laws. And this provided, as I said, legal certainty, promoted innovation in the region, and allowed a flourish of fintech companies to develop and to begin to grow. Back in 2018, we saw around 100 fintech companies operating in Mexico. Today, we have upwards of 500 companies operating, so a huge uptick. And of course, later on in 2020, with the pandemic, of course, we saw an acceleration of these trends that we were already seeing. Many countries in Latin America saw governments opted to provide financial assistance, incentives for the population through digital wallets, through digital payments, which proved very effective in the adoption and in the acceleration of the adoption of these technologies. That was not the case specifically in Mexico, but the benefit of digital payments came to be very tangible. Instead of digital payments, digital loans, digital wallets being perceived as a luxury, which they largely were perceived, they became a necessity. When the instruction is to stay in your house to avoid contact, payments at a distance, digital wallets become really a necessity. So there was really a huge uptick there. And of course, with it came a huge inflow of venture capital, which was key for the growth of companies. Clip became the first or the second unicorn in Mexico, and we continue to grow in that environment. Of course, the flow of venture capital has slowed down significantly, but we see a huge opportunity still for the market, and the need still is there.
Yeah, the need is indeed very, very high. And Leandro, your company focuses on blockchain, which is one of the newest technology and sometimes quite invisible for the end user. How has this technology changed, if it has already, the financial sector, and what is there to come?
Well, allow me to begin by thanking you, Gonza, and the entire IDB team for the invitation. It's a pleasure to be here with all of you. So one important aspect to highlight is blockchain is a technology that it's cross-industry, right? It's not an industry per se. And in particular, when applied within the financial system, which is basically where Koi Banks concentrates, we implement transactional products based on blockchain technology for banks, governments, and fintechs. You need to understand like the basics of blockchain technology. In essence, blockchain technology is a decentralized database. It keeps tabs of balances, different types of assets. It authorizes a transaction. It automates different transactional flows or programmatic rules based on a transaction type. And when you understand the banking core system or the different types of transactions that take place within the financial system, in essence, you find a pattern. That pattern is Gonzalo wants to move money or any other asset to other account. Does he have the sufficient balance? Is he or is he not sending the same balance to another party at the same time? Is that transactional flow legally allowed or commercially allowed? When you analyze what a banking core system or databases applied to transactional flows analyze, it's basically what a blockchain does. You make sure that there's no double spending, you make sure that the sender actually has balance, you make sure that the recipient is an existing account, you make sure that that transaction, that asset class, it's supposed to be transacted the way the users are intended to perform that transaction. When you understand that, blockchain basically solves a lot of the different situations that the financial system faces. And it does it in a way that's been already tested. I like the way you approach the question. I mean, has already changed the financial system. Blockchain technology already has 12 years. I'm part of the probably relatively small group that believes that blockchain is no longer an experiment. The blockchain is already a reality. And you have banks in Latin America like Davivienda, Banco Macro, Banco Azteca, even you guys at the IDB have conducted some products that run on top of blockchain that are already functional and are already either saving cost, augmenting transparency, making transactions faster depending on the type of transaction, connecting different participants in the financial system in a cheaper way, especially in cross-border scenarios. So when you understand that blockchain solves this, in essence, trust issue, because when you are checking double spends, when you're checking transaction times, you're making sure that everything takes place in the way it's supposed to be. That's basically trusting the system. And blockchain has the characteristic to solve this trust issue, allow this type of transactions, but without having to trust one single party. You don't need to trust koi banks. You don't even need to trust the IDB. It's the technology per se. You can use it, nobody can change it, and in the end, it solves what you're looking for.
No, super, thanks for that insight. And Sebastian, next question for you. Bankingly provides services and works with small and mid-sized financial institutions. And what specific challenge do these kind of organizations face that can be solved by fintech companies?
Thank you very much for your question. Hi, everyone. Well, actually, you know, thinking about the collaboration between small and medium-sized financial institutions, one of the best way to approach the problem, the challenges, is by recognizing that some of those institutions, like small cooperatives, SACCOs, and cooperatives that want to transform and convert into bigger cooperatives and so then banks, is the limited resources and the technology infrastructure that they have nowadays. So first of all, is recognizing that there is a limitation, and how by partnering with fintech companies and startups, they can approach and address in a very good way that pain. Obviously, there are a lot of challenges regarding compliance, regarding regulations. That is very important. And in the best scenario, a cooperative, for instance, and I know it and hear it on a daily basis, is they must act and be 100% focused on their business, on their core business, and not be worrying about how to develop, implement something regarding, for instance, fraud activities or fraud prevention. So they can trust in a fintech that specializes in preventing that fraud, in preventing cybersecurity breaches. So by bringing those parts together and acknowledging the pain that they have, I think that those challenges will be very well solved. It's a matter of partnering, trusting each other, and realizing that working together, there are a lot of things that can be implemented well. And you're a core provider, you do core. You're a cooperative, you do cooperatives. A fintech that specializes in chatbot, as the first panelist said, they do chatbot and they are the best at it. So we can work together and try to build a better technology infrastructure for them to get bigger. and better.
No, thank you, Sebastián. And one of the challenges is that reaching to the smaller organizations that probably attend harder to attend, harder to service parts of the population. The other part is penetrating in smaller economies, and also smaller regulatory environments, and taking advantage. We have you, Marianne, here as an investor, as a former investor. How can we make fintech to penetrate smaller or countries different from the bigger economies in the region? How we can attract more fintech investment into fintech in smaller economies?
Okay, thank you, and hi everyone. Thanks for staying. We appreciate it. Yay! We appreciate it. So just back to your question about investment in fintech. So the first thing is that fintech companies are addressing key pain points in the world. They're by definition disruptive. And just in terms of my background, I used to run a bank up until last summer, and then I joined a fintech company. And one of the things I've realized is that the culture at fintech companies is beyond just meeting a target or serving customers. There's a lot of heart in the teams that work at these companies because we're trying to disrupt status quo and disrupt tradition. And so for that reason, the biggest issue, no different from most businesses, whether you're fintech or not, the biggest issue to scaling and growth is access to equity capital. And the more frontier market you are, the harder it is to access this capital. So if you're in Mexico and Brazil, it's a little easier. If you're in Jamaica, it may be a little bit harder. But at the same time, the principle, we have to acknowledge that in order for the world to have inclusive growth and to lift our region, we're going to need equity capital. And there are a number of firms looking to invest. I always say, though, that fintech companies, no matter what role you have, you should ask yourself 3 questions. Everybody in the fintech company should be able to answer it with like 1 or 2 sentences. The first thing is, what is the pain point that your product and or company is solving? So when you come up with a new idea like, Mariam, let's do QUSD, I'm like, great, what's the pain point we're solving with QUSD? The second thing is, how do we make money? A lot of fintech companies in the past have been able to raise capital with less due diligence than today. There was a world before FTX and there's a world after FTX. But if you all understand, not just the CFO and the CEO and the managing directors, but if the head of product and the front-end engineer understands how we're going to make money, that is the second question that every employee should be able to answer with 2 sentences. And it's not about revenue, it's profitable revenue. And you don't have to make profit on day 1, but you have to have a clear sense. And the third and final question that should be answered is, who regulates you? Who regulates your product? Newsflash, if you can't answer that question in 1 or 2 sentences, it's very hard for investors to invest in your company. Because we don't want to invest knowing that something might be stopped in a year or in 6 months. Those 3 questions, everybody should be able to answer, and that lifts the culture of the fintech company to be driving not just the disruption, but to also be making it allowing it to generate attractive returns for investors. We do not do impact investing into fintech. We do investing into fintech to make money, and we need to invest equity capital because the only way a sector and a region and the world will grow is for us to also allow people to access equity capital.
Super, Marianne. And talking about efficient use of capital, collaboration plays a super important role. Daniela, starting with you, how are LAC fintechs and traditional financial institutions working together for the common good in your experience? No?
Well, most of the collaboration is required, but mostly the product offering of fintechs tends to complement the existing product offering and service offering that traditional financial institutions have. And what was just said, we need to address specific pain points with innovative solutions. In the case of payments, that was the opportunity was very clear. In the case of Mexico, the gap in financial inclusion in digital payment penetration was very clear. Overall, in financial inclusion, the numbers for Mexico are alarming, still are today. 10 years ago, when we began operating in 2014, 2012, the percentage of adults with at least one financial product or service was around 27% of the population. In the last decade today, we have close to 47%, close to 50% of the adult population now has access to at least one financial product or service, which is great. It's a significant leap, but it's still a far cry from what other economies in the region have already achieved. When you turn around and you see countries like Brazil, like Chile, who have close to 90% of adult population with access to financial services, you have Argentina and Colombia with over 60%, you see the great lag that it still exists. And that is what we sought at CLIP, we sought after to fixing the payment sector, where it was very difficult for small merchants particularly to access a point-of-sale device that allows them to carry out digital payments. Historically, the way that they had access was, of course, through a financial institution, but around 70% of merchants were outright denied the application. The process was very cumbersome, very lengthy. I can speak of personal experience. I had a small entrepreneurship where we tried to access a MPOS device. The process took close to 3 months. Wow. Also almost 90 days to get the contract to have the terminal. And of course, we didn't own the terminal. It was rented out. There were penalties if we didn't reach certain milestones, certain spends. So it was very cumbersome and very difficult. And for people who are just entering digital payments, the alternative was just more attractive, which was just continue carrying cash and accepting cash. The history of CLIP has been very successful. When we began operations, there were around 500,000 MPOS terminals in the country. Today, we have around 5 million. Wow. So it's an 8-fold increase in the past decade, well, less than a decade, really. So the growth has been there. The opportunity, the need is very tangible. But we need to continue to collaborate, work with regulators, work with financial institutions, with other fintechs, to increase, obviously, the penetration and the adoption of these services, but also of the value that they have. We should see non-financial include individuals as individuals who have just not been offered the right match for their needs, or the right services for their needs. And we need to continue to work on that in financial education, and also, very importantly, to work on having a level playing field. Competition plays a huge role. The way that markets are structured in Mexico and across Latin America, we have legacy systems, we have very concentrated entities that make it difficult for new entrants to begin operations. So what I was speaking about, the developments, regulatory, legislatively, have been huge, but there is still a great need for more competition, for more entrants in the industry, in order to really capitalize in the promise of fintech and the needs of the financially not included in the region.
Oh, super, and you touched on two things. One really relevant part, and it's been a driver also for the revolution of fintech, has been regulators, proactive regulators. My next question is to Leandro, and it regards to how ready do you see both financial institutions, traditional financial institutions, and regulators of the need of innovating and bringing these technologies on board, like blockchain and the solutions they bring? How open are they in general? If you say a sample of the banking industry, how are they reacting on the need of this?
Okay, so I would make a big difference to start when we talk about blockchain technology and cryptocurrencies, right? There are two big different issues, especially when facing regulators. In our experience, when we work with regulated parties such as banks or even governments, when they talk about blockchain technology, they have a very comprehensive approach in terms of, very similar to what Marianne proposed, like what are you solving, how is it regulated, and who are you going to offer it with? Those are the three questions they ask us. And in essence, they tell you basically, if the party that is offering a blockchain product or a financial product that runs on top of blockchain rails, it's already allowed to or entitled to offer that product or service as long as the technology that they are using meets the security requirements. You know, when you become a vendor of a bank or a regulated financial institution, you need to meet criteria like ISO 7001, et cetera, right? PCI. So as long as you keep those standards and the organization or company that it's offering the product, it's entitled to, so far you're good to go. And the last one is, don't try to work around the regulation. I mean, if you are not allowed to offer securities, for instance, to a regular citizen that does not meet the risk assessment criteria, don't try to explain me that a tokenized asset, it's not a security just because it's a token and that's something different. Like, you are still a bank or a regulated fintech or a broker-dealer that it's offering a digital asset to certain segment of the population. So the fact that you use a different technology to broker that service does not exclude you from the requirements of meeting the regulatory standards you have to meet. If you meet those three criteria, they are very, honestly, they couldn't care less. I mean, they're open, but in a good way. They don't care. Like, I don't care if you use a database, blockchain, or whatever, or AI, another trendy tech right now. So if you comply with all of this, you can do it. When you start talking about cryptocurrencies, that's a whole different thing. That depends a lot on the government, the particular scenario, what are the channels that we are going to use to offer it. But in a broader answer to your question, they are much more focused, and I believe it's a good approach, on what is it that you're offering, regardless of the underlying technology. Because when regulators try to regulate technology, that's probably sentencing the death of that bill or that regulation for the next 4 or 5 years. Because technology gets obsolete. Concepts and products being offered, they take longer to get obsolete. So I'm seeing that kind of approach in Latin America, which I particularly agree with.
That's great. And as we're talking about blockchain, Marianne, Quenta basically does that, and beyond the traditional payments and lending products, what else can be done with crypto, and what else can be done with blockchain and technology to offer people in the emerging markets?
Yeah, so just building on what Leandro said, so at Kenta, we offer democratized access to gold. How many people in here own gold bars? Anybody? Right, yeah. What? Esperanza, what? Right, so none of us really own gold bars like myself. It's usually institutions or high net worth individuals. But the interesting thing about gold is if your portfolio is $100 and you have $20 in liquid capital or liquid holdings, i.e. cash, you could have $15 in cash and the other $5 is in gold, let's just call it. Gold is good because it holds its value. If you're in a market where there's devaluation, you're holding gold. If there's high inflation, you're holding gold. So what does that have to do with Kenta? So we actually do supply chain track and traceability, and we focus on commodities, and the first and core product for us is actually gold. So we take the supply chain of gold from the miner to the refiner to the vault. It comes out to the mine, and we have responsible gold. So 40% of the supply in the world is what we call responsible. So it's ESG compliant, no child labor, thank goodness, conflict free. And someone stands there with a supply chain application, and when the gold is coming out, it has a crypto belt with an NFC chip on it, and it writes to Ethereum. Is that a good one, Leandro? I just talked about blockchain a year ago.
It's good, it's good.
Okay, good, good. So it writes to the blockchain. Guys in here, if you don't know about blockchain, that's fine. Blockchain is just a database. It could write to Oracle. We choose to write to a distributed ledger technology, and we happen to use Ethereum. But the point is, it's written all along the way. It gets to the refiner, it's melted down, gold ID chip, it's right. A physical person has to view the physical asset and record the characteristics of that asset in the database. When it gets to the vaulting company, now you have real gold bars sitting there, but none of us, I live in Jamaica, I don't own any gold. What Kenta does, it offers through a digital platform, it's a nice way of saying an app, you can now buy gold because we mint tokens that represent a digital title of ownership to that gold. So you've now brought liquidity to an age-old asset. You can buy, sell, transfer, redeem, and the redeem is important from a utility versus security token definition. You can bring the gold into your country paying insurance, transportation costs, and storage costs. And so that's the power of technology. Now you're democratizing, back to where I started, access to gold, and you can go in and out of gold as much as you want. Kenta stands in the middle, where when you're ready to sell, it buys back. When you're ready to buy, it will sell to you. And there's a big risk management and supply chain unit that allows for that. So that's just one application use cases. And the last thing I'll quickly just say about that is democratize access to gold. It actually works in two ways. On the consumer side, we only have approvals in 33 states in the US. So retail, we're in the US. But the other big use case we're seeing is for businesses in the US that have global payout needs. You're paying freelancers, creators, small amounts across many countries, and you're using bank transfers. I love banks, but anyway, bank transfers, PayPal, Payoneer, and you're managing that through your treasury unit. You have one application where if you have to pay $100,000 out to 40 countries, you go into our business wallet, you buy the gold, so now you're holding that. Everyone in the 40 countries downloads the app from the App Store. The app is only allowed to receive an asset. So you do an asset transfer, it's instantaneously, low cost. That asset transfer goes from the US wallet to say, let's say Indonesia. And then the key now is the last mile access. How do you convert to fiat? And you convert to fiat through PayPal, Payoneer, bank, etc. So that's been a huge use case because it's a real pain point for these businesses to be paying freelancers and creators small sums all over the world.
Oh, super.
Yeah.
And Sebastian, last question on cooperation and how your core business is cooperation with financial institutions. You do need these banks to rely on you on providing them the solutions to their tech problems. How do you see these financial institutions open and ready for letting someone else solve the problems?
Well, it's a good question. They're quite open, and no, not all of them, obviously, but perhaps at first they hesitate a bit about how we can work together and what are the advantages, and sometimes it smells like there is something fishy going on and say, okay, you are like a competitor, what do you really want to do with me? So part of our job in the whole ecosystem, the whole fintech ecosystem, is to once again explain, set very good basis of what we are going to do and how we're going to do, how we are going to approach the problems, how we're going to make them grow, and with a vision, not a short-term vision, just like a long-term, but with a very consistent action plan. And most of them, once you explain, once you take your time and you say, okay, we're going to start with this, and then the other part, and then if there is some thing about compliances, some regulations, okay, we're going to address in this way, with this partner, with my solution, other solution, it doesn't matter, but you're going to be covered about this, and you don't have to worry about it. Also, it's a matter of trust, and you have to earn the trust. So the most important thing to do is to explain that they can trust your fintech, your company, your solution, and that they must know that we are not competitors. You know, we were speaking earlier about this, but we do not compete with them. I provide digital channels to cooperatives. I do not want to become a cooperative. I want to boost that cooperative. I want to give them a lot of other tools, and they can still be that cooperative, that referent for the community, the state, whatever they think that they need to push with our solutions. That is what we have to do for them. But going back to the question, I think they are quite open to work. They may hesitate, but I think we're on the right track. It's building the trust. It's very difficult, but I think we can all do that.
And Sebastian, I have follow-up questions for that, because clients, of course, it's a sale process, but also regulators. How do you see regulators seeing your work? I mean, you're offering fintech solutions to banks. Is that something that is welcomed by regulators, particularly in smaller regulatory environments? Is it something that is resisted? How do you find your work and the perception of the regulators?
Well, first of all, it's about transparency, and it's about letting them know that we have everything that they need, everything that they require for the cooperative, the SACCO, or the bank. For instance, there are several countries that, I mean, they mentioned something earlier, that it's not plug and play, it's not repeat, and we're living in a loop. You have to adapt to each country. Latin American, Central American, Caribbean, they all have their own policies and regulations. But if you're very transparent about what you can provide to them and how you're going to apply, especially in terms of cybersecurity, fraud prevention, I think being truly honest on the capabilities that your solution has or the partner that you choose, that is a very special way to open up or unlock that possible challenge that you may face with the regulator.
Super, and I have two final questions, and it's a little bit for all the panel. And as you know, main motivation for IDB Group to support fintech, both from a regulatory side as well from its investment, is the potential it has on financial inclusion. That's one of the items. And just to pick your brains on this, what is the contribution of fintech in general to financial inclusion? And whoever can start, and I know Daniel or Sebastián or where. Daniel, you go first? Yeah, I picked it, sorry.
Sure. Well, I think I kind of covered it with the previous questions, but financial inclusion is at the core of what we do at CLIP. Payment systems are often seen as the entry door for full financial inclusion. A merchant that accepts digital payments, that issues digital payments, is more likely to have a track record, to be able to have loans, to be able to have investment products, to be able to have insurance products. So that is completely key in the operation of how we see. And the way we see it, how we can continue to provide value to our merchants, is seeing what kind of value added we can provide on top of the initial product offering. So payments is the entry door, but then we see in which ways we can provide different value. We can provide value through top-ups that have been very successful throughout LATAM and in Mexico to provide value to the small merchants. We can provide software solutions for merchants in the sense of inventory tracking, tax facilitation. So we need to see our network of merchants as a way through which we can provide value added to them in their everyday operations. In that way, that's a relationship that we continue to build, and that allows us to provide other verticals that decrease the gap that exists in financial inclusions throughout several industries. And when we're talking about the current context, when we see a shift in consumer preferences, a shift, of course, now with the whole nearshoring effects, we need to see the construction, of course, of physical infrastructure, but also of financial infrastructure and financial tools for merchants, for small businesses, that will provide the services needed for nearshoring major investments for the country. So in that sense, when we strengthen small merchants, we help to build the broader economy and make it more attractive to be able to capitalize in flows of commerce and nearshoring in this case. So yeah, financial inclusion is key for a broad range of sectors in the economy.
No, thank you.
I take it also. In terms of financial inclusion, I mean, every time this joke, I'm sure every one of us have heard of financial inclusion a dozen times over the last 2 days. But that is one of the things I always said. What are we really doing with financial inclusion? It's not a simple question. If we're going to promote something just to check it out and then post it on LinkedIn or Instagram or our websites and try to look really cool on what we are doing, that's not something that's going to help the real inclusion of a lot of people. For me, financial inclusion is not a goal, it's a necessity. I always say this, it's a necessity. It should be in our agendas, but it's not only a matter of fintech, it's a matter of governments, it's a matter of other institutions, of legislations, regulations, and other organisms. There is a lot of people and key players that need to be involved, and once again, not only to check that out, and it's okay, let's move on. I see it in a lot of countries I visit, there is still a lot of persons that take a bus to withdraw their money, their salary, their pension, or they walk like 5 kilometers just to find an ATM. So that kind of thing it's not supposed to happen. It happens. We must know that that reality exists. Sometimes we live more like in an ecosystem than an ecosystem, and our ego blinds ourselves in this fintech environment. But financial inclusion is a necessity that needs to be addressed, and we must be very honest about that. Can we improve that? Of course, we have all the correct elements to achieve that. It's not going to be a short-term goal that is achieved. It's going to take years, months, hard work, but we must do that. It's an obligation.
Super. And the other,
Yeah,
Maria?
so,
Yeah.
well,
Sure.
yeah,
Go
no,
ahead.
I'll quickly go. So if I were advising the IDB, there's one moment, thank you for asking us, on how to use, what you can do to help with financial inclusion in terms of supporting fintechs. There are two answers I would have. The first is continuing to invest in the sector, providing capital or getting businesses capital ready for taking in even more capital. I can't underscore the impact of limited or inadequate access to capital to curbing the growth of fintech companies. And just to define how I think about financial inclusion, and we kind of take it for granted, but it's the ability to access the financial ecosystem, which includes savings products, insurance products, pension products, loans at reasonable rates. All of that is inclusion. We're all kind of included in here, but there are a lot of people who are taken advantage of or excluded. And fintech companies, by definition, if you're disrupting status quo, doing things at a lower cost, doing it more efficiently, you should be able to include more because it should be more affordable and accessible. But the second thing I would just say, of two, that I would suggest or ask of the IDB is, it's such a great moment, is if you could do some capacity building around, or allow us to do capacity building around working with our firms to think about how to get the average citizen comfortable with what we offer. And Sebastian talked about it, which is, this idea that people need to know what we do, and they need to get comfortable with it, they need to feel secure, and they need to feel that it's the same level of trust as if they're in a regulated bank that's been around for centuries. So this idea of it's not just the product, but how do we get customers clear on what it is we're providing? Because a lot of tech firms, by definition, they don't really speak to the heart of all customers. And when you think about financial inclusion, that whole awareness building and explanation is probably just as important as the cool product or process that we are delivering to the market. So I think IDB could do some workshops or capacity building on that. Thank you very much.
That's great, Marianne. And one thing, I think we have 2-3 minutes more, and I had a final question and basically directed to blockchain, but also to open banking and other trends going forward, is how these technology solutions bring to social empowerment and people owning the data that allows business to happen. And I'm probably starting with you because you're the first in the line.
Okay. Well, so empowerment or the empowerment problem, basically, it's the existing asymmetry between the financial services vendors and the financial consumers, right? Today, or mostly until a couple of years ago, the status quo was the financial vendor charges you to hold your money or your assets, to transact your money or your assets, to lend your money or your assets, but allegedly, that money and those assets is yours, but you need to pay for everything you want to do with it. If you think of blockchain technology or the promise of decentralization and try to picture a line where on one side of the spectrum you have the status quo, and on the other side you have full DeFi services, everyone owns their keys, you are full accountable for everything you hold. I believe there's a transition on that path, like making the current incumbents, the financial incumbents, make their processes more transparent, allowing users to hold or to actually own part of the assets that are still in custody of the traditional financial vendors, or that you can take them in and out. That type of graduality, I believe that basically levels the playing field, the field game. And when you level that up, you start narrowing down that asymmetry, and when you narrow down that asymmetry, you're basically empowering the user in terms of the vendor that they are working with. So the promise of decentralized technologies such as blockchain is shifting the ownership from the vendor to the user. Personally, I believe in a gradual way. I'm not a DeFi, I'm not a maxi guy that will tell you DeFi today is the way, but definitely it's the right direction.
Oh, super. I think it's time to wrap up. I don't know if any final messages. Yeah,
nice sign there.
Yeah, so.
Wait, can I just say something on Leandro's point very quickly? So what he's saying is a big point, which is the social empowerment using blockchain. You can own your data. A great example is when companies are using healthcare data to run trials, they buy from a company that owns the data. And let's say they pay $50,000 per trial to get that data set of your record. If you now start owning your data, and everywhere you go, you carry that data with you, when that data is given for the trial, you can keep a portion of that $50,000 versus it going to the centralized firm. I like to just share these because I just came into the industry a year ago, so I'm very like, just tell me what that really, really means. And so what he said is very powerful.
Oh, super, thanks for that. And thank you very much for the panel, and thank the audience as well. And
thank you.
Thank you, Gonzalo. Thank you so very much. I appreciate the comments and the questions. Say, you get $1 million, you get $1 million, you get $1 million. Give yourselves a round of applause for being the troopers. It's been a long day. A lot of you never went out, you never took breaks, you decided to stay, and I thank you for honoring the panelists. Thank you for honoring the first day of Outsource to LAC Summit's program. We thank you so very much. For those of you who have not had the time yet to have your lunch, it is located in Exhibition A. As soon as you exit these doors, that room is located on the left. Please don't forget your B2B meetings, and don't forget to catch your shuttles early tomorrow morning. We'd like to get everyone in here at 8:30. Don't forget that the president of IDB will actually be here on the stage sharing his insights. And don't forget you have your QR code on the back of your lanyard to ensure that you have your agendas that you can download and your site maps. Please pass through the exhibition hall, see who it is you can meet and how they can assist you. So thank you again. It's been a pleasure, and I will see you tomorrow bright and early at 8:30.